Thank you for joining us for episode 103 of North Star's Private Equity Fast Pitch. Our host, Jeff Henningsen, president of Lockton Companies in Texas, will be speaking with Charlie Gifford, a senior partner at New Heritage Capital and host of the popular podcast, Middle Market Musings. Charlie co-founded New Heritage Capital in 2006 and has been investing private equity in founder-owned, lower middle market businesses for 23 years. He focuses his efforts on generating proprietary investment opportunities, developing and maintaining intermediary relationships, and providing capital markets expertise in the areas of transaction pricing and structuring. Today they'll be discussing why you should be looking for companies whose owners are long-term greedy, why every individual should have their own personal advisory board, and finally, a hidden secret about Jeff's college football days. And now your host, the podfather of private equity, Jeff Henningsen.
Charlie, I'm super excited about refreshing this podcast. I can't believe it's been 4 years. You were my fifth guinea pig on the fifth episode of Private Equity Fast Pitch. And here we are. I'm really excited to get into the weeds on a couple of things that I have on my mind. But why don't we, for those that don't know you, start with just letting you give a little bit of background on yourself and your firm and what you guys are focused on.
Well, Jeff, first and foremost, I am really psyched to have the opportunity to join you again. It's amazing to me. It looks as though that we did our first one 4 years ago. As your fifth guest, honored to be included. It's remarkable what you've been able to put together with this series, and humbled to have been included early. Funny, when I think back about our discussion 4 years ago, I remember being really, really nervous. Like, holy crap, what am I going to say that's anything of value or anything that somebody might have an interest in hearing? So I did a lot of preparation. I remember taking a lot of pages of notes. I'm like, oh, I should say it this way, or I should say it this way. In full disclosure, we have our annual meeting with our investors tomorrow, and the next day my daughter graduates from high school on Friday. And I will say my prep has been a little bit less than it has been in my prior episodes. So I'm going to just wing this and hopefully we have fun. Needless to say, and people that know me, I have a lot of things to share. So I'm sure we'll have lots of ground and copy for you to put together what I hope will be a fun and interesting podcast. As it relates to me and our firm, I work in Boston, live in Boston, have for the better part of my life. New Heritage Capital was founded by myself and my two partners that spun out of our predecessor firm in 2006. Lower middle market focused, which doesn't make us unique. Focused on recaps with private business owner, which too doesn't make us unique. But what does make us unique is that we bring a creative and differentiated structure to each competitive process. And that structure is known as the private IPO. Peculiarly, there's a registered trademark around it. And to all my friends that often use it and make fun of me for having a registered trademark with which to compete in the efficient middle market, it's nice to, again, I always say, have something different to talk to people about. We've shown it to be a nice differentiation. And essentially what it is we look to do leverage buy-ins with middle market businesses. Equity role, skin in the game on behalf of founder owners is really, really important to us. We ask them to roll at least 15% of their total proceeds into NewCo. But for that 15% equity roll, we'll allow founder owners to maintain control post-close. And so it's a minority equity recap, although we have lots of negative control rights, the right to initiate a liquidity event. But it's a nice alternative to a founder owner that is looking to take chips off the table, but is a little bit uneasy in terms of taking direction from a 28-year-old HBS grad that thinks they have all the answers. And so what we do is we come in and be that capital partner or thought partner to help them take their business to the next level.
And what's interesting, you use the term leveraged buy-in as opposed to leveraged buyout, which the leveraged buyout is the one that most sellers are quite afraid of. And I know a lot of entrepreneurs are worried about selling their business to a leveraged buyout shop who then dismantles the business, or, the Wolf of Wall Street type of concept that they're scared about. So talk a little bit more about when you do a transaction like this, what types of things do you bring to the table besides the maintaining control that add value to me as a seller or a partner with my business?
Well, in addition to charm, you mean? Okay. Well, let me just, before I address that, to us, the most intuitive way to invest our LP's capital is to try to identify that founder owner that is long-term bullish and long-term greedy. To us, long-term greed is great. Look, everybody's short-term greedy. Valuation is going to be the most important thing in any transaction. Think about the individual that after their family, the most important thing is their business, and they have asset concentration issues. But for some people, they also have a risk profile different than their shareholders. And their shareholders might want to take year-end distributions whereby the CEO founder says, I want to roll free cash flow back into the business to help grow next year. But they also have that asset concentration issue. So what we do is we come in and provide material liquidity such that we're competing against other private equity firms. We go to market as a private equity firm. We play in competitive processes like a private equity firm, but we're bringing creative in those unique structures to take advantage of that individual that says, I'm too young to retire. I don't want to be somebody else's employee. I'll bring on a partner, but I also want to be able to look at my employees and vendors in the eye and say, I didn't sell. And so we are not trying to do every deal out there. We are not looking to be competitive on a volume basis. We're looking to do 2 or 3 platforms a year, finding those individuals that, again, are long-term greedy, are willing to bring on a partner, but all else equal, really want to be able to maintain control and keep their hands on the wheel. Again, from an intuitive standpoint, we like to hear people that are concerned about dilution. Well, what does that mean? That means that they really believe that the next 5 years are going to be the best 5 years in the history of their business. We always look for flags in a process whereby if somebody says to us, yeah, I like what you're saying and this sounds good and you seem like good guys, but I kind of want to roll less into the transaction than more. Because again, we like it when they have that desire to maintain as much of the ups, if you will, as possible. Another thing that we look for is, bankers don't like answering this question, but I often ask, are strategics part of the equation? Because if they are, it shows us that business owners are willing to sell out completely and not roll equity. But if we hear that strategic buyers are not part of the process, that leads us to believe and says in pretty certain terms that they're focused much more on a recap and growing their equity value than selling out completely. And we like that. That's how we compete on the front end. When we are involved in our businesses, we are as involved in our investments as any other private equity firm. And even though we are in a classically defined non-control case, we have pretty much every negative control right that you can imagine: debt, comp, capex, equity, budget approval, and the like. We have the right to initiate a liquidity event after the 4th anniversary, beginning in year 5. So again, we are playing in the private equity world, but we're playing on the fringes. And those fringes lead us to some really, really compelling businesses led by world-class CEOs that, again, are focused on growing equity value. And in our structure, all of our incentives are aligned.
So I know you mentioned that you're targeting the lower middle market. Maybe give a little bracket around what that means. And are there any industries that you're either passionate about or you're not interested in?
Isn't it funny? You see these multi-billion-dollar funds that say, you know what, we should start a middle market business. We define the middle market as transactions 300 million to $1 billion. But let me assure you, as somebody that's been doing this for now into our 3rd decade, we don't view it that way. We've stayed committed to the kind of 8 million in EBITDA to $12 million in EBITDA businesses. That's the fat part of the bell curve for us. We'll do something as small as 5 million in EBITDA and upwards of 25 million in EBITDA day one. But really, that's kind of the fat part of the bell curve. Said another way, we're looking to write an equity check of, say, 25 million up to 50 million. Certainly can punch above our weight and have in the past and going and doing larger deals and selling off some of the equity to our LPs that love that co-invest opportunity. From an industry standpoint, 3 large buckets: healthcare, business services, and industrial businesses. But I always answer that question and go back to this concept of being more horizontally focused. And what I mean by that is the first question that I always ask is, tell me about the shareholder base. What are they looking to achieve? And is there that component of skin in the game? Because to us, that's the ante to play the game with us. And so instead of just focusing on an industry, which I know a lot of people do and more people do these days, we take that industry specialization of the industries we talked about and we overlay it with that horizontal lens of what is the shareholder base and what are they looking to achieve?
You mentioned you've been doing this for 3 decades now. Love to hear your thoughts on the life cycle of your firm, where you are today, and blend in where we are in the economic cycle as well. Since you've been doing this for 3 decades, you and I have seen a lot of ups and downs. feels like we may be headed for a down at some point in the future. You just can't predict exactly when.
Let me start by saying I want to be very clear. I said into my third decade. There's a big difference, at least in my mind. And if my memory serves, you played quarterback at Mizzou, a D1 QB. I can't imagine what Jeff Henningsen was like in the late 80s. But I also know that I believe you've told me in the past that you actually tackled Brian Bosworth when he was at Oklahoma. And I just got to say, tackling the Boz yet for you now into your third decade, or well into your third decade. I'm just starting my third decade. Hats off to you for all you've accomplished, Jeff. I think it's fantastically cool.
Thank you so much for mentioning that, by the way.
I don't
talk about that very often, but for those listening, if you understand football and who Brian Bosworth is, you will quickly recognize that if a quarterback is tackling a linebacker, that's not a good thing. And I still have lasting memories in my left shoulder from him running over me, which resulted in him falling, which resulted in a quote unquote tackle. But I would not call it anything special other than saving a touchdown.
and now making myself feel very old, I feel as though watching the Boz play. And for those listeners that don't know who Brian Bosworth is, which to me is just, I can't even really get my arms around. But anyway, if you don't, Google Brian Bosworth, Oklahoma. I think the Boz was a poster child for, along with Jose Canseco, of performance enhancing drugs. And the fact that you were able to take him down is quite an accomplishment. So good on you, bud. As your question, this is a timely discussion. As I mentioned earlier, we have our AGM, our annual general meeting with our investors tomorrow and on Thursday. And it is a great annual exercise to kind of lean back and think and reflect about what you're doing, what's worked, what hasn't worked, and kind of your area of focus over the next 12 months. And I really look forward to sharing the update with our investors. I feel as though, yeah, the market is outrageously efficient. Yeah, the world it's an interesting time, right? I mean, pandemic, interest rates, inflation, supply chain challenges, to say nothing of a geopolitical theater, the likes of which I haven't seen in a long, long time. But yet the middle market continues to hang on. And it's an asset class that serves a real purpose. But when I think back about where we are right now in June of 2022, I've never felt more bullish about our franchise. Again, as I mentioned previously, not looking to do every deal out there, but when we go through in detail about where we are with the portfolio and how our businesses are holding up to some of the external pressures in the world, incredibly excited for where we sit today, and reminded that having a differentiated corporate finance solution on the front end engine of origination is yielding some really exciting investment opportunities. And then we've been able to really find those individuals that have proven to be great partners for us as we look to help them grow their business. So deal flow continues to stay strong. No doubt there are some clouds on the horizon, but I feel as though, to use a cheesy metaphor, we got a pretty good ballast to our ship. We'll continue to move forward.
I'm going to change directions on you. 4 years ago, you and I talked, we did the podcast, and it wasn't too long after you mentioned to me, probably over a beer, hey, I think I'm going to do a podcast. I was like, there is no way Charlie Gifford's going to do a podcast. Takes too much effort, takes too much planning, et cetera, et cetera. It's just kind of a pain. And now you've got a great podcast, Middle Market Musings. And I very much enjoy listening to it. It's very conversational and entertaining. Mine, I don't think is as entertaining as yours in any way, shape, or form. And it's obviously a reflection of the host, which says a lot about me versus you. I think you do an amazing job. Tell us about why you started the podcast, maybe any surprising value or surprises that came out of doing it.
Well, at first, I'm going to have to call BS on your comment about the host, one versus the other, but we'll put that off to the side for now. Well, first, let's just say imitation is the most sincere form of flattery. I think in keeping with our go-to-market strategy of trying to do something different has, throughout my career, led me to do different things. And I think, Jeff, without blowing sunshine your way, I always hold you in high regard. And there's nothing more boring than a podcast when people fawn over each other. So I'm very cognizant of that. But I do got to say, you've always been a trailblazer when it comes to trying new stuff, whether it's your starting heavy hitters or your North Star Forum in Vegas each year. You're always thinking, it sounds so trite to say, thinking outside the box, but that's exactly what it is. Because we do know that as the market becomes more and more efficient, it's harder and harder to stand out. It's more and more difficult to try to say like, well, how is somebody going to know the difference between buyout group ABC and XYZ? So we're always pushing ourselves. We're always questioning our assumptions to try to figure out new ways to compete with our target audience of trusted advisors to middle market businesses. Because everybody does the calls, the Zooms, the meetings, and the conferences. What else can you do? And so let's just say I had an idea. It was not a novel idea. Thanks, Jeff Henningsen. But the idea about coming up with a way to talk about and profiling friends, not dissimilar to how you're doing. I talked about it for 3 years, and then the day job got in the way, and my inbox got in the way, and the return phone calls got in the way. But eventually my friend Andy Greenberg, who runs Greenberg Variations Capital in Philadelphia, we yin and yang pretty well. I've always enjoyed him. He is such an easy guy to make fun of, and he takes it really, really well. I've always had a nice little repartee, and he came to me. I told him, like I told you, I was going to do it. And then for 2 years, he's like, have you done it? Have you done it? Let's do it together. I'm like, hell no, I'm not going to do it with you. I'm going to do it on my own. But Andy's a really creative guy. And I did think, after thinking about it time and time again, he's got a good marketing network. I think we push each other to create something that has been rewarding. And a media darling, I never aspire to be. The wiseacre listening will say, yes, we know, Charlie, you'll never become a media darling. But it has proven to be a nice way to further relationships, to profile people that we think have something to say and whose voice they would resonate with our listening audience. I appreciate you saying those nice things. I'd say the $20 check is in the mail, but I'll say instead the $20 Venmo will be forthcoming shortly.
That's awesome. And to your point, I have a lot of people that have said that they're going to do a podcast. Some have started, but what you've been able to do is what a lot of people can't do, which is stick to it. And just for those listening, whether it's starting a podcast or whatever you're doing, most people start and give up before they actually get any traction. And that's the difference, I think, a lot of times between people that have a successful business or have a successful idea is they stick through those points.
Two things. Do you know what the average number of all podcasts started? What is the average lifespan, i.e. how many episodes get published before they die on the vine? Do you know what that number is?
I don't.
What would you guess?
20.
Well, I found this on the worldwide internet, and they told me it's 14. So I don't know if it's accurate or not, but if it's online, it must be real.
That stat has to probably include some that are like Joe Rogan, or Tim Ferriss, which is hundreds and hundreds or thousands. So.
Indeed, that was not median, it was mean. So there's probably a lot of one and dones. And the other thing that somebody sent me the other day, a quote unquote friend, and it was a meme, and it said a list of things. It didn't give the list, but it said list of things that women find really attractive in men. And number 4, and all I saw was number 4. And number 4 was start a podcast because there's not enough of them out there. So I got that going for me.
I love that. I love that. What have you experienced, something rewarding or something surprising in starting the podcast that you weren't expecting?
Independent of just the endless amount of heat I get from my friends. I mean, honestly, I can't go out, whether it's to a conference in our industry or actually really more pointedly around home in Boston, and I go out, the heat I get from my friends, it's just it's unending. But yet I believe in, what doesn't kill you makes you stronger. And I'm more motivated than anything else to continue on, given the fact that they just find it so amusing that they can make fun of me about the fact that I'm a podcast host. Well, a couple of things that surprised me. One, I think my 3 adult daughters, I don't believe they've listened to 30 seconds of any one of them. And that includes my wife as well. But that's okay. I wasn't doing that to have them count them as part of the audience. But I do think the most rewarding thing is the feedback you get from people you don't even know, right? I mean, constantly just people reaching out saying, I love what you're doing. And it always, it always surprises me. It always makes me laugh. I'm like, man, people are really listening to this. And these aren't, again, people I kind of know that are like saying, oh, I want to say something nice about somebody today because I read that's what I should do to live a fulfilling life. It's people I don't know. And so those are always the most rewarding things to hear from people. The intended consequence, always want it to be the unintended consequence, is when a trusted advisor to a middle market business calls and say, I heard your podcast. I heard you mention about your strategy, what you do differently, because again, this is not an advertisement for New Heritage Capital, but they call up and say, I have a business owner, or I have a prospect that I'd love to talk to you about and learn more about how you structure your deals with private business owners, because I think it might be a good fit. Look, it's advertising, Jeff, right? If somebody says to me, have you closed any deals or have you exited any deals that you sourced through your podcast? I mean, the answer is no, right? But we manage our brand, I often say, the private IPO and New Heritage Capital, like a consumer products company manages their own brand. It's a lot of segmenting the market. It's a lot of managing the message and culturing and nurturing the brand for those right opportunities. And I think the last thing I'd say is it's fun. I really enjoy it. There's so many people out there that have really interesting stories to tell. I will say one of our really fun gets was that we interviewed the Nobel laureate winning economist from the University of Chicago named Eugene Fama, who was this like 82-year-old, incredibly accomplished individual. Andy, to his credit, was able to line it up. And I just remember going into it, what the hell am I going to ask this guy? He ended up having a really fun conversation. So again, it's been immensely rewarding and I've had a lot of fun doing it.
Like you, I've had a lot of surprising things that have happened, and I've talked about those on the other podcasts, so I won't go into those. It has definitely been very rewarding, not only to get to know folks that I actually have known for many years in a different way. And oftentimes in the podcast discussion, I find something out new about them that I never even knew before. So let's go to my normal question, which we just posted our 100th episode in May. It was a montage of advice to 20-somethings, college kids, young professionals that has become very popular. And that's one of the benefits that I've received that I wasn't expecting, was a lot of young professionals following the podcast and gaining advice and insight into folks like you. I'm sure in your position, you have tons of young kids coming to you saying, hey, Mr. Gifford, which I'm sure you love them saying.
That always gets my attention.
Yes. What would you do if you were in my shoes? What advice would you give me? What are you telling those young professionals now?
My usual quip is, and it's totally true, thank God I'm not looking for a job these days. There are so many driven, bright, aggressive, thoughtful people out there. I empathize with trying to break into private equity. If private equity is your goal, the most tried and true pattern, no breaking news here, but the most obvious routes would be through investment banking, either M&A or leverage finance, or work for a consulting firm. And I always think that if I was to start again, I would try to do that. I always say that if you can get into a program, a training program that pays you for 2 years to learn a lot and bust your rear end, I mean, that is just, you forego a quality of life for learning a lot. But at the end of it, if you work hard and you develop relationships, then you should have some pretty interesting opportunities. I think the most important thing is it's not rocket science. You don't have to be an atom splitter to be able to be a good networker. And I say, I'd start off with friends and family and be dogged in asking for help. Or as I tell my kids, we have 3 daughters, 23, 21, and 18. And the 23-year-old is working in New York City for ABC News now. And what I always tell her, whenever you're talking to somebody older than you are, always ask for advice, right? Because who doesn't like it when somebody younger says, hey, I'd love to ask for your advice on something? Everyone's ego is like saying, oh, of course, I'd love to give advice. but just don't be afraid to say those words. I'd like to ask your advice on something. Be diligent on your follow-up. Be thoughtful on your follow-up. And again, blocking and tackling. And most importantly, don't let a conversation end without asking the question, is there anyone else that you know that you think I would benefit speaking with? Because you don't want a conversation to be a dead end. Think of it as like a tree. You want it to grow from spot to spot. And the more people you talk to, the more traffic you play in, the greater your odds that you'll find a good outcome.
Tell me your philosophies or thoughts on how a young person should try to gain mentorship or a mentor.
I think that much like networking, that's a skill set. And there are people that have an innate ability to connect with people that are a good listener, that read social cues, talking about more EQ stuff than IQ stuff. I think about it personally because I think sometimes my wife always tells me I'm a really crappy listener. So I really actively try to become a better listener. But when you're with people, specifically people that are senior to you in the age component, really be diligent about listening and being prepared. If you're going to have a conversation with somebody that you think can be impactful, really prepare. I mean, really prepared. With the internet right now, like if I'm talking to somebody that works at a place, I'm going to go onto their website. It's so bloody easy. I mean, think about it, Jeff. When you and I were younger, you couldn't do the diligence. Now you can spend 20 minutes on somebody's website and come up with 3 really insightful questions to ask. So spend the time up front. Don't mail it in. Be prepared. And I also say, if you do get an interview, do that times 10, obviously, but really ask for the order. I always say to my kids, if you don't advocate for yourself, no one will advocate for you. So if you find yourself in an interview, don't be afraid to say, I want this job. This is the most important thing that is on my radar screen right now. And sell yourself by asking super intelligent questions. Do not wait until the following day to send a follow-up email. You're going to be amazed like how many times people don't follow up. I think that's the ante to play the job search game, but you'd be amazed how many people don't do that.
I love that. I always find that people who seek my advice and ask me questions, I lean more into becoming a mentor than somebody who says, hey, Mr. Henningsen, would you be my mentor? Asking the question, would you be my mentor, tends to be a one-way street to somebody wanting to shortcut things as opposed to somebody who is displaying that they work super hard. And I think senior professionals in business really want to help young people who are driven.
What you just said really resonates with me. I didn't think about it, what I'm about to share with you until you just said that. And that is, I personally have my own, this sounds really cheesy, but I have my own advisory board. Now, they don't know that they're on my advisory board. And for those in private equity, know what an advisory board is. But those that aren't, you have a group of LPs that invest in your funds. And then there's a select group, a small number of people that sit on your advisory board, where after your annual meeting, you sit and you talk and you just share kind of a deeper discussion about things that are facing the firm. So having the resources of, again, those that have more experience than you do, to be able to call on is so impactful. I have been blessed to have had the opportunity to meet some pretty amazing people in the world. And really starting with my dad. I don't talk about my dad too much, but my dad, I didn't even know what my father did when I went to college. Actually, I knew he was a banker, but I didn't really know anything about him because he was at every one of my lacrosse games, every one of my basketball games, and he never brought his work home with us when I was younger. But when I went to college, I remember I was Russian fraternity, and somebody said, I didn't know your dad was CEO of blankety blank, CEO of, I don't know, Bank of Boston or Fleet or whatever it was at the time. But he ended up retiring, and he still is to this day, chairman emeritus of Bank of America. But yet you wouldn't know that when you talk to him. He doesn't give a crap about what you did yesterday. He cares about how you carry yourself today, how you treat people today. That's all that matters to him. I don't even know if he knows that he's on my advisory board. I do know that he doesn't know anything about technology. He can barely turn on his cell phone. So I'm not worried about him hearing this, but having people, whether it's your father or people that you come across that you can add to your own personal advisory board, I think could be really impactful. And again, you don't need to tell them that, but you need to nurture those relationships and ensure that they are there, that they're going to be there to return your phone calls, return your emails if you want to think through something.
Another thing, I know you have a particular article that you recommend for young professionals. Can you tell us about that and why you think it's valuable?
Yeah, I mean, when people say, the other thing I should read, particularly when people are trying to learn about private equity and business, I always point out Michael Porter, a very well-known HBS professor, wrote a case study called The Five Forces, and it really studies the competitive dynamics across any industry. Anybody that's listening to this that would want a copy of it, I'm happy to email it to them. I think it's somewhat of a Bible for learning about how a business works, how a business competes in an industry. And I think it's required reading regardless of what you're going to do. So if anybody's interested, just shoot me an email. I'm happy to send it along.
Well, I love this conversation we're having, and it really goes back to an article I've referenced many times called A Brand Called You from Fast Company in 1998. And everything you've been doing with New Heritage and your own personal brand all leads into having the ability to have advisors who help you, have mentors who help you. People want to lean into folks that care about the brand that they're displaying to their family, to their community, to their business community. And I think it's just a lifelong DNA of some people that really understand the value of doing that and being, as your father appropriately put it, who are you and are you carrying yourself properly?
100%. I mean, I think back about where I am, where you are, certainly a hell of a lot closer to the 18th green than the first tee. And I'm usually 2 fairways away from the 18th green. But right now, and I hear more and more people say this, because I say it a lot, people agree, is like, at this stage in our life, it's the best years, the usually last years before you move over and do something else. I hate the R word, and not anywhere close there yet, but your career is about really focusing on people that you enjoy and that you trust. And it leads to an element of wanting to look forward to coming to work. I mean, I feel immensely blessed about the job I have. People say, do you like your job? I was like, and I'm like thinking about all the crap I have to do. And then I'm like, I take a step back. I'm like, well, I really, really like my partners. I really, really believe that we're serving a purpose and having a niche that we focus on. I really enjoy learning about new businesses and how they compete. I love the intellectual exercise of helping owners thinking about growth and positioning their business for somebody else to buy it at a value that we paid for it. And man, at the end of the day, if you do well, you get compensated pretty darn well. So when you piled all those together, man, it's a pretty good job. And I think that when you combine all that and doing it with people you like and you trust and developing relationships, that's a tough business to beat. So I'd say to all those much smarter than me individuals out there that are starting their careers, yeah, I mean, I think that if you can find the right people to partner with and you bust your ass to kind of get ahead, it could be a great way to spend your working days.
Well, you talked about motivators, and I'm in agreement that I've made a focus my entire career to be around people that are enjoyable to be around, whether we do business ever or not. It's really more important to be around people that are great people like yourself. You threw out some great quotes in our first podcast. Do you have any new quotes that you're repeating now or something you can share in that vein?
Man, all right. So I did no preparation, Jeff, and now you're putting me on the spot to come up with quotes. I mean, yeah, I do. I like quotes, and I think that it's fun Actually, even though I haven't prepared, as I said at the front end, I do like quotes, and a couple of them always ring true. A few of my favorites, Mark Twain, who is often found high on my list of favorite quotes. He said, "The man who does not read good books has no advantage over the man who can't read them." He also said, "Clothes make the man. Naked people have little or no influence in society." Twain also said, "Go to heaven for the climate and hell for the company." One thing that resonates, and I think we could perhaps say it's true today, one of my favorites is from Winston Churchill, which is, "The best argument against democracy is a 5-minute conversation with the average voter." How good is that? I'll give you one last one. People are rich when you have what you need in the world: a nice family, a good education, to participate in the community, to see your children do well. That is rich.
Well, I will tell the listeners that although Charlie, quote unquote, was not prepared, clearly he believes in reading a lot and having quotes on hand, because I think they were right near his desk. So that means he lives with quotes. And like myself, people know I love quotes so much. And obviously I ask that question a lot, but somebody who works with me gave me a tear off calendar quote thing that I have in my closet. And every day I pull a quote off. And I mean, I can't tell you how many times I'm sharing those, taking a photo and sending it to people because they just resonate with me. So it's awesome to share those. Those are great quotes.
I'll also just say, usually one of the things that always resonates with me, because in my family, I come from a large family, and we all grew up in a family of giving toasts about one another at certain events, birthdays or anniversaries. And usually when I stand up, one of my siblings always screams, "There's no such thing as a bad short toast." That's another one that I usually get, and I've always paid it forward whenever I'm around my friends. But anyway, I do think there's some truth to that as well. Be succinct, get to the point, keep it simple. Can't go wrong with that.
I think there's another Mark Twain quote that says, "If I had more time, I would have written you a shorter letter," right? Is that his?
Yeah, I think that's right. Yeah, indeed.
That's awesome.
Yeah.
Well, Charlie, I've really appreciated this. Hopefully we can do episode 205 in 4 years and catch up. And the R word hopefully will not be in either of our discussions, because I, like you, don't plan on ever retiring. I enjoy what I do. You enjoy what you do. And as long as you enjoy what you do, then it becomes a hobby as opposed to work. And you really enjoy what you do. And I've really loved watching New Heritage grow and over the years, and how you interact with your CEOs and your companies and everybody in the deal community. So I really appreciate it, and look forward to seeing you on the road soon.
Well, listen, my friend, it's always a pleasure. And again, grateful to have had the opportunity to join you today, and very much look forward to, as I always do, our interactions, and look forward to seeing you again at some point soon.
Thank you for listening to North Star's Private Equity Fast Pitch. For more information about Fast Pitch or North Star's boutique heavy hitter events, you can visit us at enorthstar.com.